What's going on, YouTube? Welcome back to my channel. If you are new to this channel, I am ralphdatrader, and on this channel, I'm just here to document my journey, show you guys experiences that I've come across, show you guys the way that I've traded, um, and what else? Oh yeah, if you like the video, hit the like button. Hey, subscribe to the channel. I'm just here to just drop some content on how I trade and how I do things in the market. So with that being said, today's video, I'm going to go over GBP USD trade breakdown from the previous week, from Monday all the way to Friday, and show you guys exactly what I did. And yeah, we're gonna go from there. All right, let's get into this video then. All right, as you guys can see, I am on the MT4 platform. I also use TradingView sometimes, but today's video I'm gonna go over with the using the MT4 platform. All right, and we're gonna start off from Monday. We're gonna make our way all the way down to Friday. And first thing that you guys should be doing once you enter into this market, you need to find out whether you're a bull or you're a bear. Basically, what I mean by that is you're gonna be bullish today or you're gonna be bearish. All right. So that's what the first thing you should be doing. And also you should also identify which way the trend is going. And trade your setup. All right. Don't trade what nobody else does. Don't sit here and trade what your friend said. Go trade. Trade your setup. All right. So with that being said, just go over this trade and how I took this trade. All right. As you can see, when the market opened up on Sunday, 5 p.m. Eastern Standard Time, market came down to this last week's low and the lowest point of last Friday. All right, I love to use the daily high and the daily low, weekly high, weekly low indicator. This is only, because this is also support and resistance. So I don't really consider it indicator, but this is something that you can just plug in on your chart. They have it on the MT4 platform. If you just go in and you can find that, or you could just do it manually. I just like to do it. I just have this indicator on here because it does it for me. All right. So that's less stuff that I have to do. But as you can see, when the market opened up on Sunday, the market came right down to last week's low. And it did not want to break this low. All right. Then it finally broke below this low. And for me, I trade London sessions. So, I'm not really watching the market right now. But when London session opens up at 3 a.m. Eastern Standard Time, I'm up at 1. So this is when I'm starting looking into the market. But clearly, as you can see, when this market opened up, this market pushed down and created a double bottom for you guys. If you don't see it, take this cursor and let me show it to you. Right here, market came down. All right, market came down, market pushed down, market pushed back up, market pushed back down. That's a double bottom right there for you guys. All right, we can mark that off for my people that need to see visually. It's clear as day. We have a double bottom pattern down here. And there you go. You can see the market kept rejecting beyond this point right here. So as this double bottom was formed, it's an entry right here. You can take this entry and you can ride it all the way up. But if you're not comfortable with taking this entry, then you can wait until it retests the neckline. So basically you have the neckline of the W is here. So you go from that body to that wick, and now you're waiting on a retest of this neckline. All right. And so as you can see, price came up. Excuse me, price came up, price came back, retested that neckline. Boom, get your bag. That's 20. That's 23 pips. 20, and I'm 20 pips, and I'm good. All right. So that was an entry you could have taken on that. And then coming back, I think this here was around like 4:35 a.m. As you can see, price came back, rejected that weekly low. It did not want to break through that weekly low on this candlestick. And all you do is just drag your zone on over, guys. Just drag your zone over. Drag your zone over. And you can see price came down, rejected this zone again, push right back up. Next candle open up, open up below that low, but what did it do? It come right back to the zone, rejected. Next candle open up, you got to retest with this wick, buy. You got rejection, buy. If you're not comfortable getting in there, wait until the momentum start pushing up, and once it breaks this low, you can take the trade from here. You can take the trade from here and ride that momentum all the way up. Because look, you got one rejection, 2, 3, 4, 5, 6 rejections. Take the trade. All right. So now if you missed all this morning, then you could have caught this trade right here during the London session. I mean during the New York session. Price came up here. This was our last high point. As you can see, this was the high that price had went, and price started rejecting this area again. Price came down, rejection. Price shot back up, price shot back down. Now you got your high, you got your low. Price pushed back up. Now you got your lower high. So price came right back, rejected this zone again. This is your confirmation candle. This is your entry candle right here. You can take this trade, but if you needed to break that low, you can wait till it break that low. But this is your entry candle right here. You can take this trade all the way down. That's 32 pips. You wanted to hold it all the way down here. That's 37 pips. All right. All right. Now let's get into Tuesday. As we can see, market came and opened up into the next session, Sydney session. Market just started accumulating. All right. Market came all the way down to this lowest point of the previous low of yesterday. Did not want to break, finally broke. Then market pushed back up, gave you a break. You got a breakthrough. All right. Market came back, gave you a retest. Boom. Confirmation candle. This is your yeah. Okay, just put it back in the bowl, okay? All right. The market came back, pushed back up. All right. You could have entered in on this candle, or you could have waited to see what this candle was going to do, because as you can see, this market, this was this big indecisive candle. But when this market opened, when this candle opened up, this candle shot down, then pushed back up. All right, that's exactly what it did. So if you wanted to, you could have got in here, and depending on your lot size, you know what I mean, you could have took this drawdown. But me, I love to get in at the lowest point, so I'm gonna wait till the candle. I'm gonna wait and see what the candle does. And like I said, you could have got in here, waited till this candle pulled up and got in here, just took this up, but you still would have had been in this drawdown. You don't know, but you're gonna just depending on where your stop loss at. You wouldn't, if you had your stop loss down here, you wouldn't have got stopped out. So you let the trade just play out. But this candle came down here. If you didn't take it, if you did not take it here or here, you know what I mean, then you had this candle. Like I said, this candle opened up, it pushed down, then it pushed back up. But if you did not take it on this candle, you could have definitely have gotten on this candle. Wait till the candle open, wait on that pullback, because GBP USD, I noticed always has, every time, usually when a candle opens, it has a slight pullback. So I just wait on the pullback to limit my drawdown. And as it started moving up in momentum, you could have took it. All right. So you could have took the trade there. If not, you didn't want to take that. Hey, you definitely got to get in on this one. And as you see, it's another 20 pips. This is just 20 pips, and I'm in and out the market right here, you guys. And then as you can see, the market was coming up to this weekly low. And as you can see, we're respecting this weekly low. Rejection, rejection, rejection. Look at this, rejection, rejection, rejection. So that letting you know that this is a strong level of resistance, all right? So the market is rejecting that area. Then what did the market do? Market pushed back down, straight back, right back to this previous low of yesterday. And what did it do? Market shot right back up. Market shot right back up, right? So in all this time, all this market is doing right here is just ranging in between this support and resistance. It's just accumulating, right? So as you can see, this market came up. It came to this, it broke here, retested. Depending on the type of trader you are, you know what I mean? Some people trade ranges. They probably hopped in and caught this. You know what I mean? That's what they do. But like I said, you have to go into the market depending on going to market and knowing who you are. You're a bear or you're a bull. What are you trading today? But as you can see, this was the trade that I took. I'm here. So I'm London session, I'm out. You know what I mean? But I'm just showing you, also just showing you guys some other moves that you could some potential setups that you could have taken depending on, your style of trading. And like I said, when the market came here and there's all these mini rejections here. So once this market shot down, came back, retested this area, if it was me, I'm telling you right now, I'm selling here. I'm selling here and I'm riding this bad baby all the way down. That's me, because I'm seeing all these rejections at this level. This is too many rejections and it's not breaking through. So I'm taking this trade here, setting my stop loss back here. You know what I mean? And that's just me. All right. So now we're gonna go into Wednesday. Market opened up, Sydney session. Here we go. Market came right back down to yesterday's low. As you can see, market broke through that low, but this was the low. But market stopped at this point right here. All right, so you want to just keep an eye on where the market stopping at. All right, so I'll go ahead and just mark that up. As you can see, the market came down, stopped at this point, and like I said, I'm not trading here yet. Anyways, I trade during the London session, but once I get up, these are the things that I'm seeing. So as I can see, the market came to this point, stopped. Market broke back above this high. Above the previous day's low. Market came back down and market pushed back up. The market pushed back down. And if you guys don't see it, that's clearly a double top pattern. Came up, market pushed up, market pushed down, market pushed up. And I'm taking a trade right here. So I got my little man here with me too, guys. So like I said, this is channel here, man. This is real. Uncut, no editing, ain't no more serious. All right, leave that bowl alone. But as you can see, like I said, the market created a double top pattern, came up, pushed down, pushed back up, and this is the entry for me. All right, this is the entry. I'm entering in on this candle right here and taking it down. But if you did not, this is your confirmation candle, and you got this break, you got this retest. And if you want, you could took the trade here and took it on down. That's still 20 pips. All right. All right, let's move on. And like I say, here you go. That was the move during the London session. And then right after this M, and we always know, like after the M, the market is gonna shoot right back up, you guys. When the market performs a M, it's gonna shoot back up. And look what the market did. Once this market created this on this second leg of this M pattern, what did the market do? And the market gave you a double bottom pattern. I don't know if you guys see it, but I'm short it to you. Look at this. Market came down here. So this is your leg of the W. Market came down, market shot up, market came down, and boom. Here's your double bottom right here, you guys. This is a double bottom pattern. All right, see that? Came down, came up, came down, and this is your confirmation candle, and this is your entry. And you take that bad baby all the way up. That's a 63 pip movement. Like I told you, I'm 20 pips, and I'm out. All right, 20 pips. But if you wanted to catch this, that's a 63 pip move. And if you did not want to enter in down here, because this is your confirmation candle, you could have took this trade on this candle right here. You could have taken it, because if you wanted to, you want to record it, wait and break the neckline of the W. Right here's your neckline, guys. This is the neckline of the W. So you want to get a break and a retest of that neckline. And on this candle, as you can clearly see, put this horizontal line there on here. That's your neckline of the W. Came down, came up, pushed back down. Confirmation candle, you'll break, you'll retest of the neckline, take the trade, man. Go on and get your bag, all right? And if you didn't catch it, if you didn't want to get on this candle, you definitely had to get on this candle. But if you missed this, and if you was up, fixing you some coffee or getting you, a bagel, whatever it is that y'all, whatever it is that you like to eat in the morning, if you missed this run, but then what did the market do? The market gave you another break and a retest of the previous day low. Market broke, retest, here's your entry. All right, this is your entry. Boom. If you're a break and retest trader, that's me. I'm a break and retest trader. That's how I trade, and I trade double bottoms and double tops. That's the type of trader that I am. And this is your entry. You got to break, retest. Hey, take the trade, let the trade play out. Set your stop loss, risk to reward, baby. Risk to reward is very important. All right. And then as you can see, the market finally came up. It started rejecting this last week's low. You can see we was rejecting, and the market finally broke through, came back, retested again, came back, retesting. This is like I'm thinking around maybe like 1 o'clock. But as if you was looking to be in the market still around that time, I really don't trade GBP USD after 11 o'clock, because it starts, there's really no more volatility in the market, and it starts to slow down. But if you were somebody who was still up, still trading, it broke that low, retested, here's your entry candle. That's 22 pips, okay? All right, let's go into the next day. So as the market opened up in the next session, market started accumulating, where it was accumulating. And as you can see, we're accumulating in between the weekly low and the previous day high, all right? So we're just accumulating. And as you can see, this is the highest point that the market accumulated. Did not want to break below this weekly low. Came back, shot back up. Like I say, depending on the type of trader you are, some people, they probably would have caught this because the market came up, gave you this little wick. So you got to break and a retest with that little wick, and they probably took that. You know what I mean? I don't know what type of trader you are, but me personally, I'm not taking that. Market is still just moving sideways. So the market is accumulating. All right. So, but here's where I took the trade. As you can see, the market came, market still was accumulating. So now the market is currently, I'm waiting on the market to break this last week's low. So market shot down with this big engulfing candle. So now I just need a retest. All right. So now as you can see, the market, you always remember too, you guys, support and resistance is a zone. All right. It's not just this line. So this would be a zone. Okay. So you just zone this up. You just put a zone around that line. Go from the body to the wick. All right. All right. You go from the body to the wick. So now now all you're doing is you waiting for it to break out this you waiting for a breakout of this box and a retest. All right. So the market broke out, it retested. If you wanted, you could have took this trade here. If not, you could have waited till a full retest. So you got to break through, come back, you got a retest, and you got your confirmation candle here. This is your entry candle. You can enter in on this candlestick right here, 20 pips, right? And you could have rode it all the way down, all right? And that was your move, all right? And as you can see, this thing came all the way down to that low of yesterday, all right? So you got the break, retest. This is a confirmation candle. If you want to get in at this highest point, you take the trade from up here. You want to get in at the highest point, you take the trade from up here. You get your, whatever your pip goal is, you get that and you get out. If you want to just hold it. You held it, that was a 60 pip move all the way down. All right. Now let's go into the next day. And at the end of this, I'm going to show you guys something else that I have learned. All right. Let's remove this horizontal line off of here. And here we go. We came into Friday. And as you guys can see, the market was just accumulating. And let me show you. The market was accumulating in between the weekly low and the previous low of yesterday. All right. So we just accumulating in between there. And as you can see, we just accumulating. The market did not want to break below the previous day's low. So as you can see, the market came down, the market shot right back up, and the market shot right back down. All right, so the market gave you another double bottom pattern on this Friday. Check it out. Out of this accumulation, market came down, all right, market pushed back up, market pushed back down, and this is your double bottom right here. This is your confirmation candle. This is your entry. And you ride this bad baby all the way up to whatever you want. You just ride it all the way up, all right? And that was just clear money. But if you wanted to wait until it break that neckline, then you could have waited. This is the neckline of the W right here. This is your neckline. This is the neckline of the W. All right. Now with all this momentum going, you're not going to get a retest. Okay, as you can see, this thing, a flat bottom is straight momentum. As you can see, a flat bottom, flat bottom. So once momentum broke this neckline, you should have just been in this trade. You should have just been in that trade. All right. And that was the breakdown of GBP USD all the way from Monday to Friday. Now, I want to show you guys something else that I have learned, that I've learned and that I've seen from another trader. And I think this is really going to take my trading to the next level with this right here. And what it is some people say it's quarter theory, some people say it's bank institution. I really don't know, but all I know is round is the rounded numbers, and I just know that the banks love to trade at the rounded numbers, because at the end of the day, you guys, you got to understand what we're trading. We are trading money. Currency is money. And who trades the money? The bank. So you got to start thinking like the bank. What the banks like to do. Banks like to make things easier for themselves. So the banks are going to trade at round numbers. So I'm going to show you guys something that I've learned, and I actually back tested and it works. So let me show it to you guys. And we're going to go all the way back to Monday on the 9th, and I'm going to show you guys. We're going to go all the way back to this thing. All right. So here it is. These light blue lines, these are the levels that I was talking about. And all these are rounded numbers, all right? They're rounded numbers. So this is the 3850 level, all right? We don't worry about the last number on the currency pair, because we know that's just the pip-at number. We only worry about the last four numbers, okay? So this is 3850 level. This right here is the 38750. So all I did was I did these in 25 pips. So that's what I did. So once I put in the 3850 level, I just moved up 25 pips, because I like to get 20 pips, but I did 25 to cover the to basically cover the spread. Okay. So let's go through this breakdown again. And like I said before, market was accumulating. As you can see, the market was rejecting this level, this resistance right here, the 38,750 level. Okay, market came down to this low, like we said previously, and created this double bottom, and it shot up. And as you can see, it shot right up to this 38,750 level. Okay, and market, when it came back, and when the market came back and retested, where did it retest at, you guys? As you can see, it retested right at this 3850 level. Retested right at the 3850 level. So from this level, from this support to this resistance is 25 pips. Okay, that's 25 pips. But like we said, it rejected. The body never closed below the low. So the market came up, and like we had in the previous example, where we had our support area where we took this trade, and that was it. But I'm just showing you guys these key levels in the market that the banks love to trade at. And let's move on down. As we can see, when this market created this high, this lower high, now you're waiting on a breaking the retest of the 38 of this resistance, which is the 3750 level. And as you can see, you got a break, you got a retracement. And as the momentum start coming back down, you can take that trade from here to here. That's 25 pips, 25 pips, depending on your lot size. That's a standard lot size. That's 250 for the day. Come on with it, man. Cash me out. All right. Now let's go into the next day. What is the market doing? The market is basically, what the market is doing is accumulating right at that level again, that 3850 level. It's accumulating between the lowest point of yesterday and this and this resistance level that the banks love to trade at. As you can see, it's just accumulating at that level. Then we got our breakthrough of the previous low. Now you're waiting on the retest. And like I said, I took the trade here. Once it retested this low and started moving up in the momentum, enter. But like I said, if you did not want to take that trade, look what it did. It came right back, retested this level that the banks love to trade at. You got a break, retest, and boom, just like I told you guys, this was your entry candle. That's 20 pips. That's 20 pips. And if you wanted to catch it at the lowest point, once it opened up, it retested, and you call this momentum, you already know from here, and you see the light blue line here, there's another the 38,750 level, you know, from here to here is 25 pips, depending on your pip goal. You know what I mean? It's money. All right. And let's move on. All right. Then as you can see, what did the market do? What did the market do, you guys? The market broke through that resistance, turn support, and this wick gave you a little retest, and you could have took that trade from right on down there. And what did it come down to? What was the point that it come down to? Came right back down. Almost, it's what, about 2 pips away. 2 pips away from the next support of the 38,250 level. All right, next day, let's go. What did the market do? Market came up, broke that support again, came back down to that support, shot back up, and created that M, came right back. And as you can see, what did it do? It shot right past that. And what did it come down to, you guys? It came down to that next, that 38,000. Came right on down, a couple pips away, but it came right down to that next level that the banks love to trade at. And like I said, if you missed that, what did it do? This is powerful. It gave you this engulfing, shot up, retested that low, and also retested that key level that the banks love to trade at, the 38,250. And where did it go? You already know from here to here is 25 pips. And look at this engulfing. Look at this engulfing. It went through. What's the matter? Look at this. Just look at this. This engulfing went through 2 zones. So depending on your lot size, man, that was a 45 pip move right here. From here to here to 25. From here to here is 25. All right. Yes, sir. Okay, bring it here. All right. Let's move on to the next day. What you trying to do? Hold on, you guys. Here, there you go. Yeah. All right, you're welcome. As you can see, like we said, the next day, what was the market doing? Market was accumulating. And as you can see, it was accumulating between the 38,750 and the 38,500. It's accumulating in between that area. All right. And as you can see, it came right up here to this resistance of the 38,750 and rejected. It did not break through this area, did not break through this resistance, rejected. All right. Powerful, man. This is powerful. And like I said, we know from here to here is 25 pips. All right. So boom, we just waiting. What the market do? Like I told y'all, this is where I took the trade at. All right. Market broke through, retested. Your confirmation candle. And this is your confirmation candle right here. And boom, this is your entry. If you want, you can enter here. You got everything that you need. All right. So if you took the trade from here, from here to there, that's 25 pips. And what did this market, and what did it do? It cleared 2 freaking zones. 2 freaking zones. So if you took that trade from here all the way down to here, man, that's a 50 pip move. Standard lot size, that's $500. Cash me out. This is powerful, man. This is powerful. And then look at this here. Next day, what do we have? We got accumulating in between support and resistance. We're accumulating inside of that zone of the of the 38,250, and we're accumulating in between the 38,000. All right, we just accumulate. So all you're doing is you just waiting. Just wait until it hit your level, or however it is that you trade, whatever your setup is, that's what you trade. Like I say, I trade break and retest and double bottoms, double tops. And look at this, it came down, and when I, like we said in the earlier, it created this double bottom, came down, came up, came back down. Look at this. This is, you got your confirmation candle right here, because as you can see, you got multiple rejections at this support. All right, this is your confirmation candle. If that's not good enough for you, this is your confirmation. You definitely entering in on this candlestick. You definitely entering in on this candlestick, and you ride that bad baby all the way up. We already know from here to there is 25 pips. All right, and just look at it. And if you didn't get in here and catch the momentum, all right, then just wait until you get to the next zone. All right, what did it do? It came back, retested, boom, into the trade, take it on up. Now if you missed that zone, wait for you're breaking your retest again. What did it do? It came, broke, retest, all right, take the trade. You got that retest, take the trade. Another 25, there's 25 pips. And it's on Friday. This thing cleared 1, 2, 3 zones. That was a 75 pip move. All right. 75 pips, you guys. So, guys, that right there is something that I just picked up. I just learned, and I actually got it off of a YouTube channel from this guy's name is his YouTube channel is Third Eye Forex. I love the way he trades, because I like to trade without any indicators. I don't trade with any indicators, and I just like his style of trading. And I love those key levels. Like I say, I've back tested it, and I've seen that it worked. I'm currently back testing it, still back testing it again, and hey, it works. Showing you guys that it worked. You can implement that into your trading if you want to. If not, then you do what's best for you, because I'm doing what's best for me. And like I say, at the end of the day, I'm just showing you guys things that I've learned and things that I'm still learning, because I'm always learning. I'm a new and beginner trader, and this channel is designed to help anyone. If you're a new trader, advanced trader, whoever, we're all traders who are still learning how to trade in this market. So if this video was helpful for you, give me a like, leave a comment down below, hit the like button, hit the subscribe button, and till next time, be the reason somebody smiles today, fam. Be the reason that somebody smiles today. All right, thank you guys for watching the video.